Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. We're digging into, well, a really explosive first week of October 2025 for digital assets.
Yeah, definitely explosive.
You've got a pretty heavy stack of sources here, and they're all pointing to something beyond just, upward momentum. It seems like a fundamental shift is happening.
It really does feel like more than just momentum.
Yeah.
The data points we're looking at today, you've got these record-breaking institutional flows, you've got major geopolitical shifts. It all suggests maybe a global turning point.
Right.
So our mission here is to look past the price charts, the headline numbers, and really trying to figure out the exact mix of factors pushing this massive expansion. We're talking a crypto market cap way over $4 trillion now.
Let's start right there with that scale. Global crypto market cap currently sitting at, what, $4.32 trillion?
That's the number.
And what's really stunning is how fast it got there. It surged from about $3.8 trillion just before the U.S. government shutdown kicked in.
And that surge pushed Bitcoin, which is trading around $123,311 right now. It's right on the verge of a new all-time high, depending on the exchange you look at.
Okay, and we know historically there's this pattern, right? Like 18 months after the halving, which was April 2024, that's usually the window for a new high.
Exactly. That's the typical cycle expectation. But the speed of this run, it feels like it's not just the historical rhythm playing out. It seems amplified by these immediate global events.
Which leads us straight into maybe the most surprising factor mentioned in our sources, geopolitics. Stability there. We're seeing reports about potential eternal peace between Israel and Palestine, Hamas agreeing to terms after a warning from President Trump.
Yeah, the sources are definitely highlighting that. They're calling it a crucial domino effect for investor confidence.
How does that actually work, though? The mechanism connecting peace talks to crypto prices.
Well, think about it like this. When major global uncertainty eases, especially uncertainty tied to, key energy regions, global shipping routes, the perceived risk premium drops. So capital that was maybe sitting on the sidelines or hedging against instability, it suddenly feels safer and it starts looking for growth, moving into assets that were seen as maybe higher risk before, like Bitcoin.
Interesting. Okay, speaking of immediate events, let's tackle this weird correlation with the U.S. government shutdown. Bitcoin goes from $115,000 right when the shutdown starts, up to $125,000 just 5 days later.
Yeah.
Meanwhile, government departments handling inflation data, FMC meetings, they're closed. Does the lack of that traditional economic data somehow boost crypto? Or is that just coincidence?
That is the million-dollar question, isn't it?
Yeah.
Previous shutdowns were a mixed bag. 2013 saw prices go up. 2018-19, they went down. This time, yeah, the government stalled, but the price correlation is strong. But the sources, they're attributing it less to the shutdown itself and almost entirely to those, just massive ongoing institutional ETF inflows and that global confidence factor we just talked about.
Okay, that's a perfect transition. Let's look at those institutional floodgates. Because if you need proof that big money now sees crypto as, like, a must-have allocation, the numbers are just huge.
Absolutely. Total ETF inflows just today, $1.28 billion.
Wow.
With Bitcoin funds grabbing the lion's share, $985.1 million of that.
And Ethereum's getting in on it, too.
Oh, yeah. Ethereum ETFs pulled in $233.5 million today alone. But the real speed demon here is still BlackRock's IBIT.
Their Bitcoin ETF.
Right. Their holdings just blew past 777,000 BTC. That's over $90 billion in assets under management. It's officially being called the fastest growing ETF in history.
Okay, the pace is undeniable. But here's a question. Is this all genuinely new institutional money coming in? Or is IBIT just kind of sucking up market share from the smaller ETFs?
That's a fair question, and that's where looking at the flows during the shutdown gives us some clues.
Okay.
So since the shutdown started, we've seen $2.28 billion flow into Bitcoin ETFs and another $622 million into Ethereum ETFs.
During the shutdown uncertainty.
Exactly. During political gridlock, basically. That sheer scale of buying happening when institutions might normally pause, it really suggests this is conviction. It feels like net new capital being deployed into digital assets as a class.
And that conviction, it's not just Bitcoin and Ethereum, right? We should probably quickly mention the altcoin action. Binance BNB coin hit a new all-time high, left for $161.
Yeah, strong performance there. Market cap now $161 billion, driven by activity in its ecosystem, the Binance Smart Chain. It's getting really close to maybe flipping Ripple for that number 3 spot by market cap.
So the whole ecosystem seems to be strengthening. But you mentioned infrastructure earlier, bridging traditional finance. That takes us to this Coinbase and Samsung partnership.
Yes, this is a huge deal for mass adoption, a really big step.
Tell us about it. Coinbase One integrated into the Samsung wallet.
Fully integrated. So instantly, 75 million Samsung and Galaxy users get access. They can trade crypto, stake it, even make payments through Samsung Pay.
And crucially, what about the friction? Fees.
That's key. The integration comes with 0 trading fees and higher rewards. So it's designed to be a really competitive and easy entry point for millions of people.
Okay, that's the user side. But Coinbase is also making moves on the regulatory front in the U.S., aren't they? Applying for a national trust company charter.
That's right. And they're making a point to say, look, we have no intention to become a bank, but strategically, this charter is incredibly important for them.
Why does it matter so much? For the average customer, what's the benefit?
Well, directly, it promises things like faster on-ramps and off-ramps, getting money in and out, better custody services, and just generally stronger regulatory confidence for users.
Okay.
But the deeper strategy here, the real benefit for Coinbase, is cutting down their reliance on traditional banks, those third-party partners.
Right, because banks haven't always been friendly to crypto companies.
Exactly. They've often been hesitant, sometimes outright hostile. Securing this charter lets Coinbase bring those core payment and custody functions in-house. It builds a more self-sufficient, maybe even bank-resistant, compliant operation. Circle and Ripple have done similar things to kind of, protect their core business.
This whole push for regulatory clarity and maybe self-sufficiency, it's not just the U.S. We're seeing a really interesting development out of Nigeria now.
Yes, this is a significant pivot. The Central Bank of Nigeria, the CBN, is working with their SEC over there. They're developing a, quote, sustainable digital asset currency framework.
That sounds like a big change for Nigeria, given their previous stance was quite restrictive.
It's a huge shift, and what's really fascinating is the focus of this framework. It's centered on general cryptocurrencies, things like tokenization, NFTs.
Okay.
But the sources are very clear. It is not about central bank digital currencies, CBDCs, like their existing Inera project. This new framework is separate.
So they're choosing to build rules for the broader crypto world, rather than doubling down on their own state-controlled digital currency.
Precisely. And that choice reflects a sentiment we're hearing more globally. Many in the industry see CBDCs as, well, the exact opposite of what Bitcoin is.
Because of the control aspect.
Yeah, the argument is that CBDCs give central banks potentially full control, which kind of goes against the whole decentralization idea.
And isn't that related to what's happening in the U.S. too? The source material mentions President Trump's executive order restricting CBDC research.
Correct. That move is generally seen by the crypto industry as very supportive of decentralized alternatives. So seeing Nigeria lean towards a broad crypto framework instead of just pushing its CBDC, it suggests a global shift, prioritizing innovation, maybe financial freedom, over purely centralized control.
And this is part of a global trend for clearer rules, isn't it? We see the UAE with VIA, their Virtual Asset Regulatory Authority.
Yeah, VA in the UAE. Europe has MiCA rolling out.
And the U.S. moving on stablecoins with the Stablecoin Genius Act, as it's sometimes called.
Right, the Stablecoin Transparency Act, aiming to bring stablecoins under federal oversight, but also support their growth. All these regulatory bridges are crucial. They build the confidence needed for the next wave.
Which takes us into the deeper tech driving future value, real-world assets, RWA.
Exactly. RWA tokenization. The total value locked, or TVL, connected to RWAs just hit $1.650 billion. It's definitely shaping up to be a major narrative for the rest of 2025, maybe the next big hype cycle.
Okay, so you have all this value from real-world things being put onto blockchains. But these blockchains don't always talk to each other easily. That's where wrap tokens come in, right? Can you explain that for our listener?
Sure. Wrap tokens basically solve that interoperability problem. Blockchains, they're like separate islands. They don't inherently communicate.
Right.
So by wrapping an asset, let's use Bitcoin as the example. You essentially lock up the original Bitcoin with a custodian and then mint a tokenized version, a representation, on a different blockchain, like Ethereum.
So it's like a placeholder, backed one-to-one by the real thing.
Exactly. A custodian holds the original asset in reserve while the wrapped version circulates on the other chain. That guarantees its value.
So wrapped Bitcoin, WBTC, that's basically an ERC20 token on Ethereum that represents Bitcoin, which lets BTC be used in Ethereum's DeFi ecosystem.
Precisely. It unlocks the value of Bitcoin for use in Ethereum smart contracts, lending protocols, you name it.
And this isn't some small niche infrastructure, is it?
Not at all. The total market cap for all wrapped tokens is around $86.8 billion right now.
Wow.
And the biggest ones show how vital they are. Wrapped Ethereum, WETH, is at $17.84 billion market cap, and wrapped Bitcoin, WBTC, is $16.01 billion. This is fundamental plumbing for cross-chain finance happening today.
Okay, let's shift focus now to how these pretty advanced digital ideas are actually being used in, well, traditional economies, specifically in the Middle East. We've got two interesting examples, AI in hiring and stablecoins in payments.
Yeah, starting in Saudi Arabia, there's a partnership between SBR and Jasir. They're using AI to kind of revolutionize talent acquisition, supporting the country's Vision 2030 goals.
How so? Using AI to find talent.
Essentially, yes. Developing AI tools to objectively identify top candidates and also drastically cut the time and cost involved in recruiting, especially for large-scale hiring.
And they have this interesting term for it, know your candidate. KYC, like the financial KYC.
Exactly like that. It mirrors the know your customer standard in finance. But here, the idea is to use AI to analyze skills and experience objectively, going way beyond just, reading a CV.
That's fascinating. Okay, and then in the UAE, there's a big move with stablecoins?
Yes, another really practical application. This involves Starlink, Changer, Contours, and actually Shanghai Tang, the luxury lifestyle brand.
Shanghai Tang?
Yeah. Their goal is to push global stablecoin payments, specifically using EURQ and USDC for buying goods and services, both for retail e-commerce and also B2B transactions.
So this isn't just theoretical. They're building actual payment systems.
They are. They're focused on creating compliant cross-border payment corridors, linking Europe, Asia, and the Middle East. The aim is, quote, instant, compliant, and cost-effective global payment solutions. This is pulling regulated digital money into high-value, real-world trade.
And Shanghai Tang using it means
It means they're integrating these stablecoin payment options across their stores, both physical and online. It really shows that the plumbing, the regulatory side, and the tech side for using decentralized currency in complex global B2B commerce is falling into place much faster than maybe people realized.
Okay, we have covered a lot of ground today. Started with just these unprecedented capital flows, that $4.32 trillion market cap, giants like BlackRock's IB setting records.
Yeah, driven by massive institutional buying.
We even saw how things like potential geopolitical stability are being cited now as factors boosting investor confidence.
Then we looked at how regulation is maturing globally. You've got Coinbase seeking that national charter to gain independence.
Right, while Nigeria prioritizes a broad crypto framework over a CBDC.
And it's all underpinned by this deep tech RWA tokenization, hitting billions in value, wrapped tokens acting as essential cross-chain bridges.
It really does feel like a convergence. You've got institutional finance finally meeting regulatory clarity.
Absolutely. And at the same time, this advanced digital tech is starting to change tangible things. How luxury goods get paid for across borders, even how companies hire people in the Middle East using AI.
So perhaps a final thought, or maybe a question for you, the listener, to ponder.
Okay. Considering this huge institutional investment now pouring into real-world assets, we mentioned that $1.650 billion TVL figure, and seeing these compliant cross-border stablecoin systems being built out like in the UAE, how quickly do you think tokenization is going to fundamentally redefine physical assets and global B2B trade? Say, in the next 6 months, something to think about.